Japanese businesses have been generating significant excitement, with profit margins doubling in the past decade. Dividends and share buybacks have also doubled compared to 10 years ago, driven by shareholder-friendly corporate governance changes. The Nikkei 225 index has risen by 25% over the past year, surpassing its 1989 record. This success is due to Japan's transformation over the past 35 years, focusing on global growth due to economic stagnation and an aging population at home. In 1996, foreign subsidiaries of Japanese manufacturers accounted for just 7% of total sales, reaching a record high of 29% last year. America and China have been central to this global expansion, with more than half of all sales from Japanese firms' foreign subsidiaries coming from these two superpowers. The intensifying Sino-American rivalry poses a significant threat to corporate Japan's revival. Some companies are shifting manufacturing from China to Southeast Asia and America to diversify supply chains and mitigate geopolitical risks. Mitsubishi Motors, for example, announced it would stop making cars in China and expand production in Thailand and Indonesia. In America, Japanese companies like Toyota and Panasonic have benefited from over $1 billion each in state and federal incentives since 2021. Toyota's $8 billion investment in battery production in North Carolina was met with hundreds of millions in tax and infrastructure incentives. However, Japanese firms express concerns over domestic content requirements and restrictions on their investments in China that accompany American subsidies. They also fear America's volatile politics, with potential changes in subsidy regimes under different administrations. Protectionist sentiments are rising, as evidenced by President Biden's opposition to Nippon Steel's acquisition of U.S. Steel. Despite mistrust of America, few Japanese firms are cutting ties with China. Even those reducing Chinese manufacturing remain reliant on suppliers across the Sea of Japan. The Chinese market remains lucrative, with Toyota and Nissan teaming up with Tencent and Baidu to boost their car sales in China. Annual trade between Japan and China was roughly a third higher in the past 2 years than in the late 2010s. However, Chinese competitors are increasingly challenging Japanese firms, benefiting from cheap energy and materials from Russia and offering sophisticated products in industries like industrial automation, batteries, car making, and electronics. Chinese electric cars are outcompeting Japanese vehicles in China and other Asian markets. CATL, a Chinese battery giant, has surpassed Japanese rivals like Panasonic. Omron, a Japanese maker of industrial robots, is cutting 2,000 jobs this year due to increased competition from Chinese firms. Japanese semiconductor companies may also face challenges as China seeks to reduce reliance on foreign technology. Chinese makers of chip manufacturing equipment have increased their domestic market share from 4% in 2019 to an estimated 14% last year. This is concerning for Japanese firms like Tokyo Electron, which generates almost half its sales in China. To navigate these geopolitical challenges, Japanese firms are increasingly focusing on economic security. A survey by the Institute of Geoeconomics found that 38% of large Japanese companies have established economic security departments. These departments monitor political risks and report directly to board members. The Japanese government also supports these efforts financially. Improving relations with South Korea and Taiwan provides some solace for Japanese firms. SK Group, a South Korean conglomerate, plans to expand tie-ups with Japanese semiconductor firms. TSMC, a Taiwanese semiconductor giant, opened its first factory in Japan in February and plans to build a second. The unpredictable global environment is also leading some Japanese companies to repatriate production. Rising manufacturing wages in China and Japan's sluggish growth make this shift less expensive. The Japanese government provides subsidies to companies in sensitive industries, such as aircraft parts and rare earth minerals. Last year, Panasonic announced it would shift some air conditioner production from China to Japan. While this may ease Japan's concerns, it could also hinder its global comeback.